Good afternoon, everybody. Welcome. Give everybody some chance to come in. I'm seeing some familiar faces. Hi, Jane. She's always got all these books behind her, making me feel like I need to up my shelf over here. I've only got not even half as many books as she's got. I need to do some reading, Jane. Welcome, guys. We'll be starting in a few minutes. We're just waiting for everybody to park their cars, come on inside, get their ticket of admission. I always like to point that out because I know, we're all struggling a little bit with the COVID situation and adapting life and everything else. But the one thing is that people can't make the excuse of like, oh, I couldn't make it to the meeting. I had to get through traffic or there was no parking. It makes it so much easier when, you can just open your laptop or your computer and join the meeting.
Assuming you have cell service or internet service.
This is true. This is true. If you don't have internet service, then that kind of goes right out the window, unfortunately.
Having just been connected up, I am so thankful for having a connection now. So,
oh yeah.
All right.
I think we're about ready.
Well,
Well, good afternoon, everyone. Welcome to the COVID-19 National NREIA call for November. That's right. It's November. It's almost Thanksgiving. The holidays are right around the corner. We want to welcome everybody today. Thank you for joining us. We are going to go through some announcements, of course. Charles, our CEO and Director of Legislative Affairs, is going to be bringing us up on all current situations of what's going on legislatively. And as he said earlier, he could probably talk for 2 hours, but we'll try to keep it down a little bit. We're going to try to keep today to an hour. And then we have a special guest today from Get Covered, Mr. Ryan Solomon. They are, I believe, our newest corporate member and member benefit. So we're really excited about Ryan talking to you guys today about getting covered, renters insurance, and all the above. So I will go ahead and turn it over to our CEO and Director of Legislative Affairs, Mr. Charles Tassel.
Thank you very much, Mr. President. I want to first of all start off by saying thank you, Home Depot Pro. Been here all along this whole time with us and can't thank you enough for the ongoing support. Please make sure you're participating. Thank Home Depot when you're there. Remind them that you're a national NREIA member and continue to work with them. They're a great vendor and great service. Again, these are all of our sponsors, and these are the main ones, I should say, our primary ones. And please utilize them. It will make your life easier. That's one of the first and foremost things I can say. It makes my life easier, whether it's, my insurance is taken care of. I got funds available. I just got my update on another Office Depot order I did. This makes our life easier, folks. Utilize those tools if you're not familiar with them. So take a look at these. Again, experts, trainers, anything you need, it's right there. So with that, reminder, National NREIA, we're here to promote, protect, and educate. Nonprofit, 35 years now. And folks, we always kind of laugh, and Mr. President, we've talked about this, 40,000 members. The reality is we're in excess of that. We like to keep it low, would be humble, we'll stay at 40,000. We'll leave that number there. But folks, it's because of your organizations and local associations that really are the strength, and we want to be here for you and provide you with good information. So to that end, what we're going to do is just first of all say thank you. And what I'm going to do is actually very quickly here. We don't want to take a bunch of time. I'm going to touch on kind of an industry standard or the industry update and give that. Rebecca has asked me to fill in for her. Please keep her in prayer. She's not feeling too well right now. She's not in the COVID, so don't worry about that, but just under the weather just the same. So we want to make sure we're keeping our thoughts and prayers. And so bear with me and give me a little bit of grace as I go through this and cover what she knows very well, which is the industry side, and then also I'll touch on some legislative. But with that, what we're going to do is jump over and I'm going to back up with a thank you. And at the thank you, I'm going to turn it over to Ryan here and just say, Ryan, Ryan Solomon is with Get Covered. And if you've ever had one of those moments, and Ryan, I appreciate appreciated your comment. I think the other day we said it was one of those, when you have that uh-oh moment, I think there's another way to phrase it, but when you have that, am I actually covered, or did that really happen? And you start digging through papers to find out if you're covered. And Ryan, if you want to take it from here, you can share your screen there a little bit, and we'll just put you up on the screen and just focus on what it is that Get Covered does and what you're going to do for us as one of our newest vendor members.
Absolutely. Thank you, Charles, and thank you, Ryan. I will share my screen, Lori, if you don't mind.
There we go. Okay.
So my name is Ryan Solomon. I'm from Get Covered, and good afternoon, guys, and thank you for having me. I'm here to talk to you about tenant insurance and making sure that your tenants and your units are always covered. The NREIA is going to begin offering affordable, easy to purchase insurance solutions for its members to offer to their tenants. Our goal is to help members mitigate the risk at the property and individual unit level by making sure that tenants purchase and secondarily maintain their insurance throughout the term of their lease. As Charles touched on, a big pain point we've noticed in the past, I come from the property management side, a big pain point for us was always, our tenants purchase the insurance at lease signing, but no one ever checks to make sure that they continue to pay for their insurance throughout the term of their lease. So there's always this gray area of, oh, an accident just happened. Does our tenant still have insurance? How do we know? So we've partnered with the NREIA to essentially offer software and a website to make it super easy to track your tenant's insurance policies and also give them a place to purchase insurance when they need it most.
Hey Ryan, really quickly, I know that we're looking at your screen, but if you're sharing something with us, we can't see it.
I haven't started sharing.
Okay, I'm sorry, I just wanted to make sure.
Okay, perfect. I just have this one sheet up for now.
Okay.
So I'll start with the different products that we offer, or that we're going to begin offering to all of our members. And remember, all of these insurance policies can be purchased online in under a minute. So I'm sharing my screen right now. I'm showing the renter's insurance portal. So essentially your tenants would go online, they get an email, and they type in their address and their unit number and their email address, and they could purchase insurance in under a minute. So I'll come back to this in 1 second, but the products that we're going to begin offering to all of the members, which you guys can then offer to all your tenants, are renter's insurance policy, typical HO4, a master liability policy, which is strictly liability on the individual unit. So make sure that your tenant's liability is covered, but it doesn't cover their personal property. We also are going to start offering a tenant rent guarantee product, which is if your tenant loses their job, the insurance carrier will pay their rent for a predetermined period of time, either 3, 6, or 12 months. I'll come back to that one. That's a good one. We're going to begin offering commercial small business insurance. So if people are working out of their home, they can get a small business owner's policy. And we also are going to start offering a security deposit replacement program. So typically, if you have, typically you require your tenants to put up 1 month of security in order to move into the building, 1 month of rent. There's now a security deposit replacement program that we're going to start doing building by building if you guys are interested, whereby instead of putting up a refundable 1 month security, now your tenants will be able to put up a non-refundable security deposit replacement. So instead of paying $1,000 1 month of rent coverage, they can now pay a non-refundable $200 payment upfront, which will be pooled together, and it will act as a security deposit replacement. So we're going to offer, again, renter's insurance policy, a master liability policy, a tenant rent guarantee product. If they lose their job, the insurance carrier pays the rent. commercial small business owners policy, security deposit replacement program. So 5 different products that are all designed to help the landlords mitigate risk at the property and individual unit level. And these are all, in addition to mitigating risk, these are also great products just to create goodwill with your tenants, right? These are all products that help the tenant in case an accident happens. So we want to try to maintain that landlord tenant relationship and keep it as good as possible because we don't want tenants to move out. So I'm quickly going to touch on first the renter's insurance product that we're going to start offering. So when a tenant goes to sign a lease, there'll be a link on the lease or in the introductory package. It says, hey, if you don't have renter's insurance, a lot of our buildings require it. I don't know, which one of our members require renter's insurance, who doesn't. It's always a good idea to get your tenants to take out renter's insurance because usually your general liability insurance, the deductible is much higher than the tenant level renter's insurance policy. So typically, your general liability deductible might be $10,000, whereas the individual unit insurance might be $100 deductible or $500 deductible. So this is what it looks like if your tenant needs renter's insurance. Click on the link, get directed to the website, you type in your address, you put in your unit number, email address. Bear with me, I'm going to try to do I'm just going to do it quickly so you can see. And then continue. Essentially, your tenants can purchase this policy in about 1 minute. There's no screening process, no background check. Everyone is eligible, live bind, so they can purchase it in under a minute. An email goes out to the property manager, an email goes out to the landlord, an email goes out to the tenant. It's stored on the back end. We continue to track to make sure that the tenant continues to pay for the insurance. If they don't pay for it, everyone gets an alert saying, hey, you're late paying your bill or your policy has been canceled. So all of this is pre-populated again, get covered now. Oh, sorry, billing period, biannually, birth date, 04, 04, 8, 2, okay. And then, so now the tenant can enter in their credit card information or ACH, process payment, and they now have an insurance policy. It's that simple. So that's how easy it is to purchase a renter's insurance policy. All of the insurance products that we're going to begin offering to our members are that easy to purchase. As I mentioned, we also are going to begin offering a tenant rent guarantee product. What this is if a tenant has a job at the time, they take out this policy while they're employed and they lose their job while they have this policy in place, the insurance carrier will pay their rent for a predetermined period of time, either 3 months, 6 months, or 12 months, depending on the policy that they purchase. It's really, I mean, given today's circumstances, it's really a great product. And even if the tenant isn't going to purchase it, it's really a great way to kind of give back to your tenants and say, hey, I know you might be going through a tough time. Check out this product if you're worried about job loss. And the other thing that we've noticed that some landlords and members are doing is they're taking out a tenant rent guarantee product out on behalf of their tenants so that, if one of their tenants does lose their job, the insurance carrier is going to pay the rent for the predetermined period of time. That, or it's a great way to try to attract new tenants. What we found is if you have a building where you're offering this rent guarantee product to a new tenant and the guy across the street isn't, it's a great way to try to win new tenants, right? We all know how tough it is to get tenants right now. And it's a great way to attract tenants. So similar concept, it's super easy. Put in your information, you put in your rent amount. The way this works is for every $1,000 of rent, it costs the tenant $35 per month. So again, $1,000 of rent coverage for a 3-month policy costs $35 per month. So at $3,000 of rent coverage, it's $35 per month. So it's really, really affordable if people are concerned about job loss. So same concept. I'm not going to bore you guys with filling out all the information, but you can purchase a policy in under a minute. The only things that are required are your employer information, your landlord information, and when you go to make a claim, you just have to pretty much show that you had a job and you're eligible for unemployment. That's really the biggest requirement, is as long as a tenant is eligible for unemployment, they would qualify to get their rent paid. The other products we offer as well are the business owners policy, right? If you have commercial property or you have some tenants that are work from home, they can purchase a small business owners policy. And again, I'm not going to bore you guys with filling all the information out, but same concept. It takes a little bit longer than purchasing a renter's insurance product. And then the two other products are the security deposit replacement program, which typically, you know, when a tenant, which I kind of explained quickly, but it's a great way to attract new tenants into a building, right, who might not have the 1 month of rent to pay up front or 2 months of rent to pay up front. They can pay a fraction of that, non-refundable. And we put together a pro forma for each building and each member and tell you how much you have to charge on a non-refundable level in order to have enough money pooled together so that you're not going to run out in case a tenant doesn't pay or moves out and defaults on their rent. So those are the main insurance products that we're going to begin offering to our members. And I think it's a great way to help mitigate all risk, as much risk as possible, right? It's never all risk, but just every little bit helps right now. So I think maybe I'll stop and take a few questions if you see any.
So one of the questions Bill Tan asked about, this is insurance that's available for everyone in the sense that you're a vendor, you're in the marketplace and you're out there, but then this is actually white-listed or a little white sheet for us to say, here's for National REIA members. And can you touch on what benefits National REIA members gain from this?
Sorry, you cut out for 1 second, Charles. Can you repeat the last bit?
So what benefit is there for National REIA members?
The benefit for the members is their units are insured. They're eliminating a lot of the risk, right? A big part is if the units don't have insurance and an accident happens, the landlord is most likely going to have to come out of pocket to pay the cost, because their deductible is going to be very high. And if it's, you know, pet damage that might be under $500, usually your renter's insurance would cover that. Or similarly with the rent guarantee product, the benefit is you're not going to have to evict your tenant because they don't have a job right now and can't afford rent. With the rent guarantee product in place, now that tenant can stay in place, not pay rent, and you don't have to pay the eviction costs to kick them out. So there's a lot of great benefits, not necessarily financially going into your pocket, but protecting yourself in case of an accident.
Having had 8 units wiped out at one time by a flood, and having sat down and cried with the residents who lost everything, and only one of which actually had renter's insurance, even though they were all required to have it. Yeah, those are not the moments you want to live through. You want to make sure you're covered and protected on that. Another question was the maximum amount of coverage on the security deposit replacement policy. So if there's
the maximum amount of coverage on security deposit, well, it's really a function of how much money is pooled together, because it's not necessarily, there's no maximum. It's always going to be a fraction of what you're charging on a refundable amount. So if your refundable security is 1 month of coverage or 2 months of rent, this is always a fraction of that cost. And another thing we're seeing, it depends on the state you're in, because we talked about this before, right? In some states, it might not be legal, but in some states, it's actually required that landlords are now required to have to give back the security to their tenants so they could pay the rent. That's actually something that's been happening. I think it was Cincinnati, we noticed that. So that the security deposit replacement program is really interesting. Also, if you own a building and you want to try to figure out a way to give back to your tenants and say, hey, I know you're going through a tough time. I'm going to give you your 1 month security deposit back if you want to pay this non-refundable one-time amount, which is called 20% of that 1 month. So it's a great way to give back to your tenants too, and keep them in the buildings.
Got it. All right. And we go through the details, and people can go through this site and actually see everything nice and clearly. You'll be seeing this on National REIA's website. Go there, see it, and we're happy to work with a new vendor and make sure you're covered from those moments in life. So,
Great.
all right.
Thank you. And any other questions you guys might have, we're always here to help. And similarly, we can help put together pro formas and help in any way you guys want. So we're here for you.
All right. Thank you very much, Ryan. Appreciate it. I'm going to slide back over here and see what I can do on sharing the screen back again here. Bear with me. All right. So National REIA, we are here to help. Just kind of touch base on things. Mr. President, I don't know if you want to touch on any of this. I know you know this by heart. So it's been a long year so far. We're in late November, so we're going to touch on a couple of things. Remember to check out the website, folks. We've got some new updates coming in, and we're tweaking some things. You can find your local group. This is a way to really get plugged in. Having said that, let me give the disclaimer side of things, which is we're not here to give legal advice. We're not here to give investment advice. Talk to your attorney, talk to your accountant, think it through, make sure it makes sense for you. This is some information we want to share with you, hopefully to make you a better person and a better investor and a wiser investor. And to that end, we're going to touch on some things kind of industry-wise and just nationally what's going on, and a little bit internationally, but mostly nationally, and figure out where we're going with things. So with that, I'm not going to read through these. It drives me crazy when somebody reads a screen. So I'm going to put some things up here, and this is going to be kind of like an ADD moment. So just bear with us as we go through some of these. Folks, we're seeing a variety of the numbers of where we're trying to find out. And let's just preface this next section here with, we are at November. Okay. Typically we see a slowdown as we kind of come into the presidential section, the presidential election once every 4 years automatically. And then the other side is you come into fall, a lot of times there's this kind of like, okay, we're going to breathe and tighten up a little bit and hold on as we get to the end of the year. So sometimes we'll see a little bit of a drop off as we come into November, and sometimes in October, and then a little bit of a pickup maybe December as it wraps up. As most of you know, getting business done and you go into December, that's hard to do. I've got one property still trying to close by the end of the year. We'll see. But what we want to do is show you September, October, index is still pretty much the same. We're sitting tight. Change in GDP. Folks, you will not see this kind of chart, I hope, again for quite a while. Because one, we got to take the hit in Q2 to come back in Q3. That's pretty amazing hits. Now, that's not put us back at neutral, and we're going to talk about what that means shortly here, because there's still other things. This is one that has been blowing people away. Now, I don't think it's too irrational, because if all the bars are closed, all the places you can go and have fun, you can't go anywhere and do anything. Well, you got nothing but sticking the money in your pocket. You can't blow it. So that's what people are doing right now. They're increasing their savings right now. So not too surprising, but I'm going the wrong way. Here we go. All right. Job openings. This is interesting. We're seeing increases continue to grow. This is the economy coming back. However, unemployment, some real numbers here, folks. It's down. We're down from previous, but folks, it's still a lot of people out there. And one of the things that's not being talked about is how many are not even in the programs right now. How many folks are out there that have not and just said, I'm out, I'm not sure what's going on, but I'm not going to continue in looking for work. I'm not filing. Nice tick downs, nice tick down, continuing on. Again, positive. We're heading in the right direction. Again, the economy opening up. Having said that, now we're into a more of a COVID times. So look at this. Compared to a year ago, are up 1.4%. This is, we're seeing some good pricing. We're seeing some good moderate growth. Actually, behind the scenes, just so you guys know, the Fed's actually talking about deflation and trying to figure out what they're going to do with that. So initial jobless claims last week, 751. That's big drops. Okay. That's a good thing. Now, is it enough? And that's really the question behind the scenes that we've got to watch and continue to look at. Is it enough? The simple fact is, folks, there's a comment in here about the Feds. The Feds have said that they're probably going to sit tight for somewhere between 6 to 18 months before they go anywhere. And the 6 was kind of like 9 to 12 to 18. You know, they're looking farther out. They're going to come back in 6, but the expectation is it's going to be farther out before that goes up. Mortgages. So we're seeing an increase, but folks, at 2.8%, holy cow. I mean, what can you buy for that? The number I love to use is the person who's going out and buying a $420,000 house at 6% interest. When you drop that interest to 3%, they're buying a $600,000 house. Same dollar amount, same payment. Now, how much do they have to down payment? If they can cover that chunk of it, it's a different issue, but there's getting to be more programs out there. So here's what we're looking at, some originations. Look at what's going on, folks. See this nice little spike we got at the end down here? We're coming in. This is some beautiful stuff. These are highest in 13 years. That's fantastic. The work on fire. But is it all? And this is where we want to kind of look through and dig into this a little bit. A couple of things. Part of the reason that I use that 6% and the 3% as an example is the price of housing, and is there a kind of a crunch in the market still? Weekly reports are showing this. New construction's up. And again, new construction is good. That puts a lot of it out there. All of you who do renovations know this. If you're renovating, it's not, hey, let me go get a couple of things, because as soon as you open up a wall, you know there's more work to be done. So there's a whole lot more money going into the property. That's a lot more money going to the economy. It's a lot more money turning in the economy, and money moving through the economy is going to keep moving these numbers up. Look at that median listing price, folks. That's huge. But notice this, okay? Fewer properties, but they're going for higher prices. That's what we're seeing pretty consistently going across the board here. There's questions on, are people still afraid of COVID? They're sitting tight. They can't figure, they're going to make quite the jump, or if they're just going to renovate and stay where they're at. So the ones that are moving, man, I'll tell you, they're getting a nice perk, and they're paying a premium, but the interest is offsetting some of that. How many days on market? This is where we're at across the country, folks. Was it 2011 is the last time we've seen it this fast? Now, November, December, expect some cooling. Let's face it, you go into the holidays, that's not the time people want to be moving. They want to be wrapped up, having families and everything else. So here's where we're at, 12%. Look at that. That's a huge list price growth. Now, if you've got properties that are hitting the market, you're in a sweet spot. Now, here's where we start to get some interesting things. Where are we at for recovery? Notice these numbers, you got pluses, minuses, kind of sitting still. Folks, it's tightening up a little bit. The market is good. But the question is really a supply question behind the scenes. And that's where the construction side of it comes in. Here's, you see at the end here, this is what I mentioned about earlier. I want to kind of preface this little downtick here. Don't be too surprised on that. Part of that comes in even as the presidential, this here can represent people coming into election. You're going, I'm not sure I want to do too much, but look at this growth back up even to where we were previously. Okay. Those are great numbers. And we want to continue seeing that and even going into the next year. So hold on. Take a look at this. Find something near you, something you can relate to, and go, okay, these numbers make sense. Largest home seller profits. Okay. Yes, profits. We can still say that. It is still a good word. We can still say that in this country. Thank you very much. These are strong. These are strong numbers across the country. And these are some of the highlights of it. But I want to show you some other things here. Sorry, the screens are popping in my way here. This is an interesting one I found in the opportunity zones. 74% increase. Again, opportunity zones are typically a low-income area, targeted, isolated out, about 8,000 parcels occur, I should say census tracts across the country. Great information. We're seeing them jump. Supposedly overall, though, the opportunity zones themselves are not increasing at the same rates as the rest of the markets, which is not surprising because they've been typically kind of the bottom of the barrel. They're the most difficult properties, most difficult area. The area we'd say, hey, that's a blighted area. I'm not sure I really want to invest there. I might invest on the edges of it and then start working my way in. Well, the ones that have actually started to take off are taking off at tremendous rates. All right. Mortgage applications, right? This is what we're talking about, that little bit of a decline, just waiting for a little more to come through and see what happens. So hold on a second. But look at the year over year. Okay. That's a huge number jump up, especially on the refinance. Everybody out there doing the refinance mortgage is making money. Here's a number that has climbed, and we even qualified in the statements below. It may be a little overstated just because the simple fact is, with all the COVID out there, all the data is not necessarily coming in as accurate as possible. So these are the kind of numbers we're going to come back to probably in a month, 2 months, and a quarter or so, and say, hey, are they still accurate, or have they been tweaked down or tweaked up a little bit? Everybody's familiar with the unemployment rate does that. The unemployment rate comes out, you can pretty much guarantee the next month it's going to be modified up or down. It is not going to stay where it's at. So interesting little focus we want to look at is foreclosures. So on foreclosures, 11,000, all right, new filings out there. Take a look at this, little zombie foreclosures. Now, again, there are not that many of them out there, but these are the kinds of things, if you can, loosen one of these up, you might be able to get something loosened up that is not part of the larger market that's pushing, or the tighter market. Because again, going back to those screens we showed, there's not a lot of properties coming onto the market. So if you're trying to buy something to flip, it's going to be hard. But you might be able to find something along these lines and shake a bank loose and say, hey, I think this is still sitting in your backlog. Can we talk about this a little bit? So look for those. And this one here I thought was interesting. Rebecca and I have chatted a little bit about this over the years. And just one of the things that we look for, and especially coming out of the recession, properties that are underwater. And when I started off with Louisiana, I thought, did they mean really actually underwater, or is this just financially? So these are just financially underwater. But those are some pretty substantial numbers. Now, the good side to it is 3.5 million are considered seriously underwater. You got 16.7 million that are actually equity rich. They're sitting in great position, and that is a stable factor for our country. That's a good thing. That's a good thing to build business on. If the numbers were flipped, that'd be one of those ones where it's like, oh, red flag here, folks, we got a problem. So let me flip to one other issue beyond homeownership, which is this. On Rent Tracker, NMHC puts this out, and notice where we're at on tracking rents. 76, 79, coming up to 80. We had some little dips in there. We saw this with the eviction moratorium dropping down to 76%, not quite. We've been seeing a very consistent focus of people, because of COVID, actually making rents a absolute priority, because they did not want to lose housing because there was no other place to go. We're starting to see those numbers come back up again, settling out because some people have realized, there may be an eviction moratorium in place. The moratoriums will stop at some point. I need to keep my housing no matter what. So bear in mind, that's kind of where we're at in the country economically. But I want to touch on the next thing, this kind of legislative issue. And I'm just going to touch on some highlights here. It's a Friday. I don't want to overload you guys too much for this. Biden has made his speech and saying he's going to be the 46th president. President Trump has not conceded. And those of you who saw Giuliani's press conference yesterday, amazing what a day will change, and see where this goes. It's heading to a court near you or me or somebody, probably in DC. We'll see what happens with that. That's all I'm going to say about that issue. I really want to focus on one other thing, which is the Senate. And I'm going to explain why the Senate in just a minute. But there's a simple fact that as business members and business people, gridlock is a good thing for us, because that means things aren't just going to shake up and change all the time. We have to address business changes and start going, wait a second, I had a plan set for the next 3 to 5 years. Okay, gridlock can be a good thing. January 5th is probably going to be the runoff date for the Georgia seats. That may be cleared up. But before we even get to January 5th, guess what? On December 11th, funding for the government expires. And you know that the House Republicans and Democrats and Senate Republicans and Democrats are just going to get along so well to get this move forward. And I'm sure we won't shut down the government again, will we? What do you think, Mr. President? Will we be shutting down again? Just who knows what's going to happen at this point, folks. So hold on. And if you have anything that's waiting on the government, get it done now rather than later. I'll just leave it at that. Other deadlines, dates coming up, just a heads up for you. That's where we're at, January 20th, Inauguration Day. We'll see what happens. What do we learn from 2020? The simple fact is polls are still broken. There are a number of, I was actually in on a stakeholder discussion on why some of the polls are done, and even the models that they're still using, and why they're using them incorrectly. The blue wave that was been reported became a blue fade. There are a lot of people digging into why. And as we look into some of the stats coming up, you'll see some information on that, on why the split ticketing that occurred. There is a whole effort on Latinos and saying, wait a second, somebody from Southern Texas who identifies as Latino is not the same as somebody who's from Southern Florida who identifies as Latino. And the votes are coming in very differently in those areas. So just across the board, there's some interesting ones. Republicans did outperform. What does that mean? I think what it really means, though, is this is the last piece. Those of you who've been around for a while, remember, it's the economy, stupid. Right now, it's coronavirus, stupid. So if you don't get that, you've missed the whole thing, because it's presidential and corona right now, and that's all we've got for eating up the news at this point. So with that, there's a couple of things that are going to happen. If there's a new administration coming in, they've got a lot of these appointments to go through, okay? Who's in the Senate determines how quickly and easily this occurs, because somebody that a Senate President Schumer would approve will be very different than a Senate President McConnell would approve. And that process, we won't know that until January, most likely. But that's going to determine a lot of how these next steps go through. So with that, here's a couple people to consider. In the Senate, you're looking at, from Senate Banking, could be Sherrod Brown or Pat Toomey, Ron Wyden or Mike Crapo, and Patrick Leahy or Richard Shelby. They will have very different agendas and very different focus for what's moving forward. So that's what's up with what's at risk with the Senate. The other side to it is keeping that gridlock in place, so that one of the nice things about having R's and D's both involved is it knocks the edges off both sides, so that you get something more mainstream, ideally for both folks, or just nothing. And we continue doing our business and working and not being involved and interfered with by the government. So just put that out there. Lame duck session. Again, we've got a couple of things coming up. Funding the government. That is the absolute biggest thing. There's a number of tax extenders out there. I'm not sure we actually get through the tax extenders. I'm not optimistic on that at this point. There's a number of things. The Housing Coalition did send a letter and talked about some relief issues. Folks, these are the same things we've talked about on voter voice, reaching out, making sure we've got renters assistance, even if there's expanded PPP, what that looks like for our folks, and making sure that actual property owners can utilize those funds. Even down to the Housing Coalition urged a letter going to Secretary Carson and saying, you've got to focus on making sure that property owners rental housing providers actually get some support and help, not just saying, hey, well, we'll send a check to a renter. Make sure that the check actually gets to the person who's actually owed the money. That is the property owner, the landlord. So with that, there's a number of things on here. I won't read through each one of them, but something in here that I want to mention is providing pandemic risk insurance. There's a question earlier, and somebody said, can we get insurance on COVID? Well, there's actually a bill that's been introduced to do basically that. So those of you who are dealing with data privacy, California did move forward with a new version, which is going to be a little bit more strict. There'll be updates on that. And as that comes out, we will be sharing that, which I want to, here's the NREIA piece I mentioned. Again, this is a single piece of legislation, but those of you who are familiar with terrorism risk insurance or the Risk Insurance Act, TREA, this would be PREA, which is say, hey, if in the event, maybe not for this situation, but in the future, if there's another one, heaven forbid it's an Ebola or something like that, and everybody says, okay, we shut them down for 6 months and nobody's going to do anything. Well, how do I get paid? How do I cover my costs? There may be something like this, and put an insurance product out there, government backed, federally backed, that would actually help provide some funds for that. So we're not just reaching into our national debt and pulling a few trillion out and spreading it around. So this is one thing that's being considered right now. And I don't expect that to be done immediately. Don't get me wrong. I'm just letting you know that this is out there. Tax policy. And this one here, please look at that center arrow. For those of you who are living in high income areas, or excuse me, high tax areas, this is a huge issue. Okay. If you are paying those taxes through a pass-through entity and you're paying it at the entity level, guess what? It's fully deductible. You're not going to have that $10,000 cap. I'm going to say that and let that sink in for a second. You're not going to have that $10,000 cap if you're paying it at the entity level. So make sure that property, Mr. President, you live in one of these nice rich estates. I just want to thank you for that. It's a beautiful place. But you put that thing into an LLC, pay the taxes through that rather than through the, it save you a ton of money. Again, these are the kinds of things that don't miss this. Make sure your accountant handles this. Make sure your taxes, or you're covering this, and make sure you're paying those taxes at the partnership or the S Corp level. All right. So what did we change with an election? Just to sum it up, this is pretty much what it was. Not a big difference, folks. The interesting thing is, if you have a Biden presidency and you look at this, Republicans actually did a little bit better in the governor's race, the state legislature, and the state control. And you've got a Democrat president. What that means is split tickets. Now, the thing behind the scenes that's very important is the little star over on the side, redistricting. That lays the groundwork for the next 10 years. That means in more states, more areas, the Republicans are going to have control on redistricting and setting up who's going to be in Congress and setting up how those congressional districts are going to lay out. That's really what was behind the scenes at this level. And it's very interesting that the American public did a split ticket. So start off with that, but down ballot, it was not uniform. This is where the blue wave became a blue fade. Some of the states, you see this, whether it was for Biden or they went Republican beyond Biden, was there a rejection of Trump or not? This is the question that's out there. And this is part of the reason that the president hasn't conceded, because he's saying, wait a second, I'm looking at down ticket. Everybody else won. How come I didn't? And this is one of the questions, is it looks like a lot of split ticketing. So the real piece though is, and I think this is interesting, incumbent governors were rewarded for their pandemic response. So governors remained in office for what they were doing. And that was huge. Now, we got red and blue states with eviction moratoriums, and we're going to touch on that a little bit more here in just a second. I'm not going to go through all the ballots. We could belabor that point. Folks, if you're in one of these states, you saw a number of ballots, and a lot of them went pretty interesting. Although I will mention this one down here. Oregon and Washington, D.C., oh my word. A small amount of street drugs in Oregon. Okay, that's fine. Washington, D.C., ethiogennic plants and fungi, which means, by the way, if you want a little soul saving, the little mushrooms, you want your magic mushroom to go for a trip, you can get it there. Now, as a property owner, it is still federally illegal. So it is okay for you to still say, hey, you cannot do that here. Just reminder of that. So just a couple things there. But this is one I want to impress upon everyone is from a membership perspective, liability protection. Know what your state law requirements are. There are a number of states that are passing these. We're hearing more and more about them, and you're going to see probably in the first 60 days of next year, a number of new liability protections come through. Please make sure you understand what they are. Bring in experts. Make sure you listen to them because they're going to be state by state based. It is not something from a federal level we can say, hey, this national level, this is what's going on. You've got to know this at the state level. It has not passed at the federal level yet. This is a state by state focus. Evictions. Moratorium is still in place. Even as of yesterday, we're hearing out of DC that the moratorium will not be extended beyond the 31st of December. I personally am not sure on that. And my reasoning for that is this. People get into the Christmas mood and the Christmas spirit. And then there's this whole discussion about all these wave of foreclosure, or not foreclosures, but wave the tsunami, as they say, of evictions on January 2nd. And we can't let that happen. And I can very likely see that get extended. And the timeline is being discussed as March 31st. So we'll see. Now, presidential issues behind the scenes are going to affect that more importantly than anything else. But just hold on, folks. That's where we're at on this. The other thing you can do is make sure you're reaching out. CARES, and I mentioned this, I want to say thank you to National Apartment Association, National Multi-Housing Council for doing a lot of spearheading on some of this housing coalition efforts. They have been doing tremendous amounts of research and have really thrown themselves in on this. And I have to give them full credit on that. So just want to mention that. Emergency rental assistance. There's some people look at, there's eviction assistance and emergency rental assistance. A lot of times emergency rental assistance is before you actually get an eviction notice, whereas the eviction diversion programs and such are typically after you've been given an eviction notice. Both of those are getting a lot of funding. You'll see them across your state. Find out what the rules are. Some areas have said, hey, we'll do this, but you've got to, I think down in Dade County, it's, what you got to give back 25%. You've got to no longer evict them. You've got to modify your lease. There's a number of qualifiers. Other places are just saying, hey, we'll cover up to $3,000 to $5,000 of back rents. Sign up the paperwork. And literally reaching out. And part of the reason they're pushing and look for them to push hard is right now it's up till December 31st. Those dollars have to be spent by December 31st. So all these agencies and organizations are pushing to get that money out as fast as possible. So if you're questioning whether you should do this, or if you've seen one of the funds come through, act on it now, because after the 31st, there's not going to be necessarily money there for it. Mr. President, that was quite a bit to unload there. I hope I wasn't too much for everyone. This is recorded, so I encourage people to go back and look at it. I'm sorry, do you have a question on that, sir?
No, I just wanted to reiterate to everybody that this is recorded. They will be able to take a look at those slides. I mean, you did a great job and explanation getting through all that. If anybody needs to go back, we will release the recording so you guys can see that later date.
All right. Thank you. We've got, Mr. President, we've got coming up is our next call on December 18th. And just as a reminder, that's a week before Christmas, folks. Yeah. So where is this year gone? Well, most of it's been in my house. Kind of stuck there, but come back on the 18th. There will be more updates, and hopefully we'll have some clarity by then as well.
Absolutely. I also want to thank Ryan Solomon from Get Covered today for presenting to us as well. Thank you to the National REIA team. Thank you to Charles Tassel for breaking everything down for us today. And I know you're going to have some more interesting developments between now and December 18th. So we'll see everyone here on Friday at 4 p.m. Eastern Standard Time. In the meantime, stay safe, stay healthy. And for any of your real estate needs, National REIA, we are here for you.
Thank you. Take care, guys.
Thank you.